Ruchir Sharma, before we talk about breakout nations, let's talk about America's revival. How strong is it?
It's all relative. So it's not a very strong recovery compared to the past recoveries that you've had, but you have to understand that we are in a very slow growth world. Things are slowing down everywhere. And on a relative basis, America is not doing that badly, especially compared to the other developed countries. And I have one simple statistic out here. Last decade, America's share in the global economy declined from over 30% down to about 22-23%. Now at least it's stabilizing. Over the past year, for the first time since 2003, the American economy grew in line with the global average. So the first step towards a cure, the presence of some healing, and that's what we have here.
All right. Last time we spoke, when the hardcover came out, you said that Poland was a breakout nation to watch. Can they still make a huge gain? Can Poland still make huge advances when Europe seems like it's cracking up?
No, I think that is a headwind in terms of that if Europe keeps doing as poorly, it's going to impact Poland's growth rate negatively. But my entire point in the book was to point out that there are positive sides to the European Union as well, done rightly, which is that if you sort of integrate countries in a smooth manner and don't do the monetary union, because the real cause of all the problems in Europe has been the monetary union. But Europe also stands for many good things, which is about the trade union, about integrating more countries inside there, you can do well. And Poland at least doesn't suffer from an overvalued currency or too much leverage which has been built up in the system which needs to be unwound. So undoubtedly Poland's growth rate is not doing as well as I had expected it to. But Poland is not cracking up either like any of the other core European countries.
We also spoke a lot when the hardcover came out about Brazil. And lately there's been a lot of talk about government meddling in Brazil, really hurting their growth, especially as it prepares to take the world stage with the World Cup and the Olympics coming up. What's the read on Brazil right now?
Well, I'm still a bit negative on Brazil because here's what I find, that of the BRICs countries, Brazil, Russia, South Africa, I find the growth rates of these countries in the next 3 to 5 years will be no different than that of the United States. That's a huge disappointment, including for Brazil, because their per capita income is only a fraction that of the United States. And for them to be growing at the same pace as the American economy is a real disappointment. The problem in Brazil really remains is that it had a huge commodity boom from which it benefited last decade. But apart from that, not much happened on the investment side. Very little new investment or manufacturing is going on in Brazil, and the exchange rate remains highly uncompetitive. So that's a real problem as far as Brazil is concerned.
And then speaking of BRICs and growth rates, let's talk about China. China is still growing, but it's not at double digits like everyone was expecting.
Yeah.
So how will China fare in this new world order with America's revival and the rest of the BRICs kind of in a little bit of state of not as strong as people expected?
China is the only country in the BRICS constituency which is still growing above the emerging market average. All the other BRICS countries have either
they're not breaking out anymore.
Exactly. They're not breaking out. They're sort of disappointing. But China also, I'm a bit concerned because here's the one very important data about China. Till about 2007, it took roughly $1 of debt to create $1 of GDP growth in China. Last 5 years, it's taken more than $3 of debt to create $1 of GDP growth in China. So that really is a concern, showing that the growth model is looking a bit tired. But to me, this is like how Japan was in the 1970s, which is that not a complete stagnation, but the growth is downshifting. And my best guess is in the next 3 to 5 years, the average growth rate of China will be 5 to 6%, which is a lot lower than what we have had for the last 3 decades. But not something which I'd be really scared about in terms of a social unrest or something, because Japan too also made a transition to a lower growth rate. But I think these forecasts of China catching up with the United States in the next 5 or 10 years, I think those forecasts will be upended.
All right, thanks for the segue. Let's talk about social unrest and the Arab Spring. A lot of people thought it was going to lead to a lot of growth, especially in nations like Egypt. They're having a hard time with it right now.
Yeah, Egypt's a complete mess. It's hard to argue otherwise. But the point I make about Egypt is that there's a lot of capital in that region which is still very interested in this largish domestic economy. And I think as far as Egypt's concerned, my gut sense is that things can't get much worse. That this has really been a complete disappointment. It's going to take a while for them to get this train wreck sorted out. But I have a feeling that things can't get that much worse, and there's a lot of liquidity in the region from the other GCC countries waiting for a better investment opportunity, and Egypt may provide that in the next year or two.